Hey everyone, welcome in to another daily editorial here on the KE Report. We're chatting with Jordan Roy-Byrne. We're going to be focusing on the precious metals as we usually do, potentially even get into some of the underlying stocks, or at least GDX, GDXJ. Jordan, gold just continues to perform well. Earlier today, it was slightly down, but as we've started recording, just continues to push higher. And this is almost 2 weeks of just straight up action with very little corrections. Gold on the futures is over 25.50. It just keeps pushing to all-time highs almost day after day right now. It really feels like a true bull market, as it should work, where dips are shallow and continue to be bought quite quickly. Jordan, any upside targets here where investors, or at least traders, short-term traders, need to be aware of that gold could maybe slow down this very aggressive upward momentum?
Yeah, 2720 would be the first. There's a potential flag target at 2720. There's also a strong Fibonacci target there. But depending on how you measure the flag, there also is an option around, I think, 2900. And also looking at the cup and handle, the measured upside target of that. And again, this is another, depending on how you measure it, because it's not a perfect textbook cup and handle, although it's a very bullish one, more bullish than your typical pattern. I'm looking at that pattern, and I think you could get 2900 or 3000, depending on how you measure it. So those are the levels that I'd be looking at. First one, 2720.
Well, Jordan, when you look at the corresponding gold stocks, we've talked about this a lot, but it's still surprising to a lot of people that gold's up, continue to make record highs all the time, and GDX still hasn't even got above its 2022 level of 4160. It did put in a new 52-week high. It got up to 39.97 just recently, the last day or so. So that is encouraging, but the margins have expanded now. And when you look at what most of the producers are putting out for Q2, a lot of their margins are back in the 800-900. Even some companies have $1,000 margins. Those are the biggest margins on record. Why are the gold stocks not breaking higher? Why are they not above the 2020 or 2022 peaks? Because these companies are making money now.
Yeah, well, and if you look at GDX, it's getting pretty close to the 2020 peak. But I mean, there's a couple components. First of all, you have valuations. And even though valuations have moved up over the last year or so, they're still at fairly low levels historically, or at least in the last 20 years. Like, they're still below the kind of median point, you could say. So there's that. There's also that these stocks, I mean, they're not regular companies. They're always having to raise money and dilute shareholders. So if you look at the shares outstanding for GDX or the HUI, compared to 4 years ago or 10 years ago, there's way more shares now. So I think those are the reasons, but the stocks they're starting to move and more money is coming in. So I think it'll only be a matter of time until they really start to catch up.
Is there anything these companies can do, whether the majors or the mid-tiers, the ones that are making money, anything they can do, you think, to message to the market to garner more interest from different investors? Because it still very much does seem like there's a lot of the diehards trading in this sector, with a few more and maybe institutions or larger money entering the sector. But even from what we're hearing from a lot of the generalists, they're simply just playing gold through different ETFs.
That's a really important point, Corey. As far as the companies, there's nothing they can do other than tell their own story and tell the market how they think they can add significant value over the next year or two. But what you said there in the question, that's really the important factor. And so this, you guys know, this is something I've been talking about for years. And so it's kind of baffling how gold's broken above 2100. Now it's approaching 2600. That's quite the move for not outperforming the stock market. So it's really, I don't want to say it's comical, but it's really interesting to me how, you have gold making this historic breakout, and yet it's not outperforming the stock market. It hasn't outperformed the 60-40 yet. However, one little side note on that, if you look at the stocks divided by the stock market, they are actually breaking out. The Huey had a very strong breakout against the S&P. And I think GDX broke out as well. So the stocks are actually in position where they should outperform the stock market, but gold itself still really struggling there. And I think the larger point behind that, or the implications of that, are the longer this continues, or I should say, as long as this continues, you're not going to see money flow down to exploration companies. You're seeing money flow into the bigger companies, even the bigger juniors that they're producing 100,000 or 150 or 200,000, those types of companies. The money is going into those companies, but it is not trickled down all the way to the exploration stocks and the more speculative parts of the sector. So it's a real nuanced view. How looking at gold nominally, yeah, this looks great. It could continue to 2,900, 3,000. The stocks, even in nominal terms, the stocks are getting close to testing and maybe breaking out from some real significant levels. But still, you got the stock market there, and money's going into the stock market. And it's exactly why you said, because the generalists are still making money in stocks, and so they don't care about ABC minerals or TMZ mines. They're still making money on stocks. They see gold's broken out. Okay, that's good for me. I'll just buy gold. It's not until the stock market cracks and you get into that next phase. It's not until that point when money is really going to flow throughout the entire precious metal sector. So it's very interesting.
Yeah, Jordan, still waiting to see where that divergence will be, where the stocks do finally roll over in the U.S. equities and have more people move over into the precious metal sector. A lot of people have also been very vocal that some of the underperformance in the gold and silver miners may just be that silver really hasn't ignited to the same way that gold is. It's nowhere close to its all-time highs at 49 or 50. So how are you looking at the technical setup in silver? And so I guess it's okay in the mid 29s here, but do you think it has a chance to finally break up into the 30s and stay there?
I think it does, just because gold is likely to pull it higher. If you look at the gold silver ratio and you look at where we are and what might happen, or if you anticipate what could happen if gold trends up to 29 or 3,000, I mean, naturally, assuming gold breaks 2,600, I mean, you're going to see money start to move into silver, and then silver will outperform by a little bit. So I think that silver, I don't want to say at worst, but conservatively, given that silver's underperforming gold here, I think if gold gets to 2,900 or 3,000, silver should be able to get to 35, maybe a little bit higher. But if you step back and you look at monthly charts and quarterly charts, the gateway to 50 is really silver making a monthly or quarterly close above that mid 30s area. Again, if you look at the monthly or quarterly charts, there's quite a bit of resistance there. So that, to me, is going to be the next really significant resistance for silver. Can we see silver at least get to that area? And my answer is yes, because I think gold can run to 2,900 or 3,000 here before you have some kind of a bigger pullback, potentially. So I think that's what I'm looking at for silver. But here and now, as long as silver, I mean, it's trading around 29 now, but if we could get another monthly close that's above 28, 29, I'm looking at it now. I mean, that would be encouraging. Silver's dealing with 28, 29. That's really the significant resistance right now. I guess looking at silver, okay, silver's 29.68, so it's above 29. So, yeah, long story short, I don't think this is the point where silver is really going to outperform. But, near term here, from here until the end of the year, I do think on the back of gold, you could see silver get to 35.
So, Jordan, let's take a step back and look at some other markets that can be sometimes correlated inversely, mostly to the precious metals. That's the US dollar and interest rates. The US dollar, that's been in quite the downtrend here for a couple months. It's closing in on that 100 level on that dollar index. Really hasn't been below 100 sustainably until early 2022, outside of a brief dip in 2023, the middle of 2023. We also have the 10-year now under 3.8%. It wasn't long ago people were talking about the 10-year up at 5%, or at least closing in on that level. What and how important is this, both of these factors, a US dollar decline and interest rate decline for the overall precious metals sector?
Well, my contrarian answer on the dollar is it's not as important as most people think, simply because gold, especially, I mean, the dollar, I think silver probably has a stronger inverse correlation to the dollar. But if we're looking at gold, the big moves always come before you get a move in the dollar. So people now are looking at the dollar. It has a bit of a technical breakdown here. This looks really ugly. This could go a lot lower. Yeah, sure, but look at gold. Gold, how much has gold gone up since the last October bottom, or it's up 20% year to date. So we've already had this big move in gold. So I'm always of the view that the precious metals market typically discounts weakness in the dollar well in advance. But with respect to the dollar, again, it's probably more, or silver is more tethered to it as far as the inverse correlation. So you get more weakness in the dollar, that should probably help silver. That can definitely boost the other commodities, at least temporarily, even though there's a lot of technical damage on those other commodities. So that's how I look at the dollar. As far as interest rates, with the Fed likely to cut at least a little bit and maybe significantly, that's pulling real interest rates lower, and that's the number one driver of gold historically. So we're starting to see some money start to come into the GLD and buy the ETFs. So that's how I'm looking at interest rates. In terms of the macro, I mean, you can look at, are we going to get a big steepening in the yield curve? It looked like we were in the 2s and 10s, but now I think that's pulled back again. So that's really what we want to watch with respect to the bond market. But it does look like, I mean, secularly, I don't know if that's a word, but in secular terms, should be a good trade here as the economy slows or flirts with a recession or has an outright recession. But very big picture over the years ahead, I would think you probably see that this is a counter trend move. Later on over the years ahead, you get a bit of a recovery in the economy, maybe stagflation, bonds will sell off again, rates will go higher. But yeah, here and now, over the next 6 to 9 months, the path of least resistance for yields and rates is lower.
Okay. Look, there's a lot going in gold's favor right now. It continues to break out. The US dollar trending lower, interest rates trending lower, the Fed going to be cutting, more people talking about potential recession next year, and continued wars going on around the world. Gold is doing its part. I know a lot of us still just sitting around saying, what's it going to take to get these stocks moving more in a broad sense? There's still a number of stocks moving, but it's kind of like a 20-80 game where 20% of the stocks are moving up and 80% still are broadly lagging this move. And silver just continues to hang around that 30 level, which isn't bad historically, but not nearly as exciting as gold. Jordan, thank you as always for your time. Again, Jordan is the editor of the Daily Gold. We will post a link in the show notes to his website. Be sure to check out Jordan's website and all his videos on YouTube to stay up to date on how he is watching and viewing the charts for the precious metals especially. Jordan, thank you very much.